Hello everyone, it's me the Boss Hog, and I'd like to just do a video about EVRAZ. You might have seen this if you have any exposure to the stock, but on Monday it absolutely crashed, having already been beaten up over the last few weeks. I want to talk about the reasons for it, how I see it moving forward, how I'm thinking about it from an investment perspective, and etc. So let's do it. Okay, so this is what my EVRAZ position looks like. You can see here that there was a huge drop earlier in the week. That's on Monday. And despite the situation that's happening in Ukraine at the moment, this isn't really related to that. I would actually argue the stock was already discounted prior to this big drop. Really, the reason for this big drop is that if you now buy EVRAZ shares, you're no longer entitled to a share in a coal company that they've divested their coal assets to, right? So basically, it's like, imagine it almost like a company going ex-dividend, right? Where you reach a point, you no longer are able to qualify for an upcoming, cash equivalent, and therefore the value is basically removed from the shares. Now, what's going to be happening is that though you're going to be entitled to just under half a share of a Russian coal company listed as RASP on the Moscow Stock Exchange, and you'd either get those as, just under half a share of RASP for each EVRAZ share you held before the 14th, or if your broker doesn't have access to the Moscow Stock Exchange, which includes mine, I use Trading 212, then what will happen is your broker will basically sell those shares and then give you back the money. So that's fine. Now, in fairness, the question then is EVRAZ a buy? And to be honest, I was originally going to do this video at the end of the month, but I've been asked a few questions, and I'm seeing some videos out there that are sort of half addressing this, and I felt like I should also produce a video because I've spoken very glowingly beforehand about EVRAZ, why I think it was better than Rio Tinto. But since I made that video some time ago now, the political situation is of course very different. So specifically with EVRAZ, it's not just the case that the mines for iron ore are primarily in Russia. It's a couple of other things beyond that. So first of all, this is a company where 5 oligarchs control about 55% of the company. Now, when you look at those oligarchs, they are absolutely going to be targeted with sanctions. Certainly 4 of them. Maybe the fifth one, who only owns about 5% and is the current CEO, isn't going to be. But, there's a risk of sanctions on the individuals in this company. Absolutely. But further on top of that as well, a few years ago, EVRAZ actually bought out a struggling steel mill business in America. Recently, they turned those around. I think last year it made about £50 million profit, so not huge compared to the scale of the business, but it turned green basically. And I would absolutely expect those to also be impacted by any sanctions, right? And that the steel mill output from North America that EVRAZ owns, they produce things like railway infrastructure goods. So that's going to be the sort of thing that is absolutely targeted for any sanctions. So you've got additional risks here that you didn't have beforehand. Previously, I was suggesting that EVRAZ, although I highlighted the oligarch ownership, I would actually argue it was less risk in a way than Rio Tinto, for example, because all of their mines, like for iron ore, yes, they're in Australia, so a lower risk country, but a major buyer of iron ore, China, is specifically looking to not buy, if they can get away with it, from Australia. So guess where they were turning to, right? And Russia was one of those destinations. So previously, Russia was basically benefiting from favorable geopolitics. Now the opposite is happening. So for me, when this share price dropped on Monday, I decided actually to increase my shares, even though by buying shares on Monday, I wouldn't be qualifying for any position in RASP. What it meant to me was that I picked up an additional 375 shares at 287p a share. So I got my average down to 417, as you can see here from my screenshot. And this looks pretty okay. In a way, of course. Where it doesn't look okay is that it's minus 26% at the moment, and this is, moving all the time. So would I suggest that you do the same? And to be honest with you, I'm not going to take that position, even though I am quite bullish on it, because I think the risk profile on EVRAZ has fundamentally changed. Like, I'm not going to be buying any more EVRAZ shares. This is about 2.5% of my portfolio. To me, that's enough to have what is genuinely risky. However, if you believe that the market is over worrying about the Ukraine situation, then I would argue that there is clearly a disconnect between the value of the shares at the moment, and the sort of 70 to 80% of EVRAZ's value which still remains outside of the coal divestiture, and therefore, you know, like the shares don't really aren't really in the right place, trading at £3 a share. So I wanted to originally wait until the end of the month because it's difficult at the moment for me to fully understand exactly where the share price is. They did do a production update at the end of January, which was broadly in line with expectations, and they are due to publish both, 2021 financials as well as guidance now that the split has happened. So I was originally going to wait for that to get a better idea, but I think we can still have some idea of where we're at. And for me, as a bit of a finger in the air at the moment, I think Evraz's share price should begin with a 5, probably in the low 5, something like 5.25 seems okay. The reason why I think that is basically if you look at the value of what's been divested, that's trading on the Russian stock exchange for about £1.80, and that's probably going to be about a quarter of the, of Evraz's value. So, for me, I basically times 180 by 3, get something like £5.40, and that to me is an extremely crude, admittedly, way of going about it. The other reason as well that Evraz might not be as appealing is because this has historically been the #1 highest yielding stock on the FTSE 100. That may well no longer be the case because although Evraz looks to continue its dividend policy, it has a protection in place that basically stops it paying out dividend if debt to EBITDA is more than 3. And what's going to happen after this disposal is basically their EBITDA is going to go down, but their debt's going to remain, right? So we're going to have a look at exactly what that looks like from a financial perspective to see whether there's any impact on the share price. And specifically the dividend. Now, it might not matter because if they're underneath that threshold, then great. And then they'll be much more reliant on specifically the price of iron ore relating to that. So what will happen to Evraz as a business is it's now less diversified because of the fact it doesn't produce coking coal anymore. In the past, it was producing so much coking coal that it could actually sell some. It produced about 220% of its needs. So basically, it kept 100% and then sold the other 120%. And that's no longer going to be the case. So over 2021, for example, when iron ore was under pressure, coking coal went up in value. So, okay, fine. That's no longer going to be kind of a counterweight. So now it becomes much, much more sensitive to iron ore price, almost 100%, right? You do have that steel mill business and a couple of other mines as well outside of iron ore, but really this is going to be a 90% plus iron ore play. So you have to be very comfortable as well with the iron ore situation moving forward. But if you are, and if you have a reasonable tolerance to risk, and or if you think that the Ukrainian situation will not kick off, or etc., then it may well represent a buying opportunity. For me, on Monday, it did. I picked up, like I say, 375 more shares, and we'll go from there. But for now, for me personally, I've reached my risk threshold, so I don't plan on buying anymore unless it does something stupid. But I'm assuming, this is kind of like the level it's going to settle at for now. And then we're going to wait until the end of the month, basically. But what I will say is that this looks a bit ugly on investing on Trading 212. I'm going to explain to you how I would go about sort of thinking about this, because although currently we're down almost £1,000, remember that we've got this cash coming in the future. So what's that going to look like, how I'm thinking about it, etc. So if there's any questions about Evraz, this is my understanding of the company, what's happening, etc. I'll leave a link to Evraz's investor page explaining where this is going on. Any questions, let me know. And yeah, that's my general situation now. So what I'm going to do next is we're going to move on to basically plugging in some numbers you can copy as well on your own stake as a way to approach this from an investment perspective. So let's do that now. All right, so I'm just going to walk you through this. It'll make a lot more sense when I'm done, I promise. So this is what's basically happening. So first of all, we put in here our shares held before the 14th of February. Okay, great. For me, that was 525. What you then get is this number of shares per Evraz share that you own, right? So I've taken this from Evraz's own website, so it should be correct. This is the exact number of decimal places, etc. So feel free to copy that likewise, or indeed just take it from the website. What that then means is basically we're going to times the number of shares times the RASP entitlement, And here I basically got 223. I rounded that down just because I'm not 100% sure how part share will count. So I rounded this down to the nearest whole number, giving me 223. And now this is an interesting one because effectively the RASP share price, and I'm just going to call it RASP or RASP because there's no way I can pronounce the Russian company name here. Now, Evraz and also Trading 212 aren't giving specifics on when they're going to crystallize the sale of these shares. So it's not like I can have a look at the share price on, say, the 14th or the 15th of February and that gets locked down. In fact, Evraz themselves specifically say, we'll basically get round to it when we do. I'm being a bit unfair there. Really, the way I'm interpreting this is that that will become available in the very first week of April. My broker will presumably sell it shortly afterwards, and I will get whatever that is. Now, on the 14th, the ruble value was like 445. Currently, it's like 511. So here I picked a midpoint of 475, and the currency here is ruble. You could pick whatever number you wanted, right? And in fairness, if we make it 511 like it is last I looked, that will then change everything on here as well, right? So we can have a little bit of a play around with that depending on what it's going to look like. Then the next one here, the value of our RASP shares is basically the number of shares and then times the value. This is also a ruble amount. Looked at the ruble to GDP. Now, in fairness, again, when you read Evraz, they're talking about taking the ruble value and putting it into dollars, and then my brokerage will put it into pounds. But again, I've just simplified here. So I've just taken the ruble to GBP direct translation to save a step. I don't think that would have a material difference. And again, I expect whatever the value is on the actual day, that will be what crystallizes for that as well. So we'll see. That then gives me this value basically. So £1,038. And this is basically what I'm expecting as a kind of redistribution of capital, right? It's not quite a dividend, even though it's working in a very similar amount, similar way for the share price. This is actually a redistribution of capital. Unfortunately, what's then going to happen is, I've got this position on Trading 212, which currently says minus 900. That's not going to get updated because that's my unrealized position for my capital. But we can kind of run some numbers here just to kind of understand what sort of position we're thinking about. So that's kind of what this second half is for. So we've got our 525 shares up here. Great. Then I've added another 375. Now, these aren't entitled, remember, to any RASP shares. That's okay. I picked them up cheap accordingly because of that. So this then gives me 900 shares, and my average price for those shares is £4.17.5, right? This is the exact amount on Trading 212. What I've then done is basically, although I know I'm going to be getting about £1.80 to £2 for each Evraz share that I have back from RASP sale, what this really does is it gives me my effective RASP discount across my entire holding, so 900. So here I've basically taken, this amount, divided it by 900, and that basically gives me a discount off each share that I own of £1.15. Okay, so then this is my new effective average share price for Evraz, right? £3.02. Then I look at the share price today, and last I looked, it was £3.10.4. And then this gives me a profit per share and a total equivalent profit. So this is how I'm going about thinking, how I'm doing, etc., etc. It's going to look a bit weird. I assume this won't just be a Trading 212 thing. Any brokerage that doesn't have access to the Moscow Stock Exchange is basically going to have to go through this as well. Obviously, if you do have access to the Moscow Stock Exchange, it's your call on whether you keep the RASP shares or not. My limited understanding of the company is it's basically got a dominant position in Russia. It has about 30% of its equivalent market. The shares do look a little bit expensive, if I'm honest, but that's only from about 15 minutes of reading. And again, you could justify keeping it because it's got a very strong position. It's agreed a 3-year supply agreement with Evraz as a minimum, although I expect that to continue on in the future just because a lot of its infrastructure is already set up to basically feed into Evraz. So it wouldn't really make sense for it not to, right? Also, as well, you have to think about these oligarchs in Evraz that own 55% of it. They're going to have a big stake in RASP by the time this is done as well, right? So again, there's going to be an overlap here of kind of mutual interest and mutual ownership that's going to support that in the long run, basically. So my opinion about this split is that it's basically neutral for Evraz. There are pros and cons. The company believes it will release value for a number of reasons, but it will fundamentally change the investment case of this company because, like I say, it will make it less of an end-to-end play and more of an iron ore focus. So again, you have to be comfortable with a more niche play. You have to be comfortable with the political situation, the volatility that this is going to have, and etc. So ultimately, it's up to you what you decide to do with this, of course. Now, I'm going to be keeping my 900 shares until at least the start of March to have a look at these financials that are coming to qualify for the dividend, whatever that looks like. I'm not sure, but I would imagine it to be something like 30 cents a share. Something like that. So again, for me, it may well be a three-figure dividend. That would be lovely. And then I'm basically going to wait and see. But to me, because of the fact that I think realistically this could be a 500p plus share even after the disposal, I'm definitely not going to be in any rush to sell this. I'm basically going to sit on it. Yeah, it's going to look a little bit ugly in terms of my unrealized capital position, but it doesn't really matter too much, right? Because eventually I'll get this redistribution of capital probably in the first week of August. I'll also get the dividend at the same time as well. So let's say it works out at £120 for the dividend. Seems a feasible guess. Then I'll basically get like £1,150 in more or less one go for those two items, and then we'll just move forward. So, but I won't be putting that back into EVR, to be clear. Like I say, I've kind of capped out on my political risk at the moment. I'm happy with my position, and I'm going to just wait and play. I'll put it into something else in my ISA. So I guess I just wanted to do this video because I've spoken about EVR before, give an update, give my thoughts, both in terms of the EVR share price drop, why it was, and how I'm going to be approaching it from a kind of investment perspective. So hopefully that was useful. Any questions, please put them in the comment section below, and I'll do my best to answer. But thank you very much for watching, everyone. And again, good luck whether you're investing in EVR or not. Bye for now.